3 months ago, I said Broadcom had the potential to be a $3 trillion semiconductor company. Some time has passed. We've had DeepSeek. We've got a new president. We've got other things going on in the world. Do I still think Broadcom presents the best opportunity in semiconductors? That's over NVIDIA. That is over AMD. That is over every other semiconductor company. We'll talk about that on today's show. We'll be talking about Broadcom, the fact that they announced their Q1 earnings after the bell. They also gave us guidance for the Q2 from the company. How does that measure up with the expectations set by Wall Street? We'll go through the different financials because, after all, this is a company with an $8 billion semiconductor business, but also has an infrastructure software business running at a quarterly revenue rate of $6.7 billion. That was 47% growth year over year. They also said on the conference call that it was running at over 90% gross margins. We'll talk about the business. We'll take a look at the conference call. A lot of things said on the conference call. In fact, the shares moved much higher as Hawk Tan was more or less singing love songs to Wall Street. Shares have wobbled between up 10 to 15% in the after hours. We'll talk about this stock also technically. What is going on, investors? Hopefully, guys are doing well out there. Broadcom up over 33% over the past year, but shares have slipped down about 22% year to date as the broader markets are in sell-off mode. Revenue came in the most recent quarter about $15 billion, $14.92 billion to be exact. That was 24.7% growth year over year. It also beat expectations by about $330 million. The company gave you guidance of about $14.6 billion the previous quarter. The upcoming quarter, revenues are expected to be at about $14.9 billion, and Wall Street was expecting a number closer to about $14.73 billion. The high end was closer to 16.5. These will get adjusted over the next several weeks, maybe even this next month or so. Company should come north of $15 billion in terms of revenue. The company also held a conference call that had a very pleasing guitar music before the conference call starts, a good alternative to the elevator music most companies play. Probably see how I've spent many years of my life probably waiting for these conference calls to begin. Now, semiconductor revenue grew 11%. AI revenue grew 77% to $4.1 billion in revenue in the most recent quarter. It's not about this quarter. It's not even about the upcoming quarter. It's about 26, 27, 28, and beyond for Broadcom. So there's some risk that demand doesn't come through. We'll talk about that here in a second. Now, they are saying that they are taping out the first 2 nanometer XPU. Just to give you some jargon, XPU is basically like a custom GPU. Think NVIDIA's GPU, but we are going to call them XPU as that is what Broadcom calls them. 2 nanometer is just simply the latest process node being offered by Taiwan Semiconductor. So they're saying they're taping that out, which is basically kind of an industry term for just getting that ready. You're literally kind of actually taping it out, and that should be in production, I wouldn't say relatively soon, but probably by the end of this year, I would assume. 3 hyperscaler customers. When you say the word hyperscaler, it means Google, Amazon, Microsoft, probably Oracle, Meta could probably be thrown in there as well. And they are going to scale to 1 million XPU clusters, which means they're going to have 1 million of these things running their processors. What shot the stock up higher was the fact that the company reiterated $60 to $90 billion worth of serviceable addressable market, or SAM, by 2027. So the company said this on the last call, and this is when Broadcom shares really shot up. They were like $160, $170, and then boom, they shot up all the way to $250 after the company said, yeah, by 2027, we'll have $60 to $90 billion of serviceable revenue. And everybody was like, wow, that is absolutely incredible. And so as time has kind of moved on from that, people are starting to question, is this still the case? Company says, yes, it is still the case. And then they say that they have 4 additional hyperscaler customers. 2 were known last quarter. 2 more have joined on board. So now you have 4 customers that have selected Broadcom to develop their next generation XPUs. Currently, you have 3. We know of one in particular, Google, and you have 2 others that will likely contribute to the $60 to $90 billion. These 4 additional customers are actually not a part of the $60 to $90 billion guidance. Once he said that on the conference call, Broadcom shares shot up an extra 5%. And so people are like, wow, this is incredibly bullish. They talked about the gross margins on the software business. This is primarily VMware. Those are up at 92%. So they're having really high gross margins there. A question on the conference call was wondering about the 4 additional customers. Could these be bigger than the customers that Broadcom already services? And they say on the conference call from Broadcom that, look, these companies are still developing their XPUs. These are the largest companies in the world. These chips take about 1.5 years to develop, but there is no reason why these 4 customers couldn't also supply additional demand and additional units. They asked Broadcom about second half guidance. That's what a lot of people are wondering. Some companies have pushed off demand into the second half. Maybe this quarter, next quarter is not as good, maybe tariffs, those types of things. And so some companies have pushed it off to the second half. Broadcom basically avoided that question, saying, hey, we're not really speculating on the second half yet. There was questions about DeepSeek, tariffs, export controls, those types of things. Broadcom really just saying that they're focused on their R&D and they're really pushing things forward. They believe that running AI on premise is going to be a growing trend, particularly when you get sovereign governments more and more into AI. They're going to obviously want very secure guardrails around that. They're not going to run that in like a public cloud situation. VMware has software and solutions for that space. They were pressed again on the 4 additional customers that will come online, potentially with XPUs, and what do they think the volumes will be? Broadcom then reiterated that, look, this takes about 1 year to kind of develop it. The software companies or the hyperscalers, they actually have to develop the software to run these things. So it's a little bit on them. Broadcom develops the hardware and then those things are paired together. But put bluntly, Broadcom says, look, we don't work with startups. These are multi-$100 billion companies that we all know the names of. Okay, so it's like Amazon, Microsoft, Google, these types of customers, Meta, Oracle. It's going to be the big boys. That's the only companies that this company tends to deal with. They're not dealing with the startups out there. There was questions about the China export controls and if that's impacting plans, and Hock Tan just basically said, no, it's not impacting anything. Interesting question. What happens to Broadcom if AI budgets kind of shift to inference, which is kind of running the AI applications? Broadcom tends to focus or talk a lot about kind of the training and the development of these frontier AI models. And they say, look, they're XPUs that do 2 different things. They have XPUs that focus on inference, and then they have some that focus on training. The combination of these 2 chips add up to $60 to $90 billion serviceable addressable market. This was kind of a backdoor question about DeepSeek, like, hey, if it becomes cheaper to train these models, does that impact Broadcom? I would probably say it probably does a little bit, but it probably then picks up the inference chips that have to be bought. On the networking side, because we tend to forget about Broadcom, that they also have basically a market-leading networking business. And we saw when NVIDIA reported their earnings that their networking business actually went down year over year, I think quarter over quarter as well. And they are seeing in a trend over at Broadcom that the large networks and the large clusters are all going to Ethernet or Ethernet networking. And that is obviously big news for Broadcom because they are basically the market leader there. Company continues to accelerate their networking development and R&D for their big clients. They have a roadmap in place, and they talked about that on the conference call. That appears to be very, very exciting. So look, even if NVIDIA or AMD or one of these other companies continues to get design wins and they sell a fair share, Broadcom is still going to benefit because their networking solution is pretty much the premier in the industry. Analysts still pressing the company about those 4 additional customers. Right now, the current shipments of XPUs from Broadcom are about 2 million units. That's expected to grow to 7 million units by 2027. That's contributing to the $60 to $90 billion of serviceable addressable revenue that the company might see? Will the 4 additional customers contribute to the 7 million? And the answer to that is yes. Only 3 customers will deliver the 7 million units that Broadcom is projecting by 2027, meaning these additional customers, which again are some of the largest in the world and have very deep pockets, would make that number much larger, potentially maybe even doubling it. That's me speculating, but it certainly could do that. Company was asked about new technologies in the networking space, particularly around optical and some copper. If you're deep in the weeds on this stuff, there are some companies working on some interesting stuff there. And Hock Tan basically saying the opportunity is very high, particularly in optical networking, which was an interesting comment. The typical mix on the AI revenue in the semiconductor businesses is 70% for the XPUs and 30% is networking. Interestingly enough, in this quarter, it was actually 40% networking. So you had a heavier share of networking, again, reinforced by when we saw NVIDIA's earnings. It was light on the networking. So that gives you a little clue as we move on later this year. NVIDIA always reports their earnings before Broadcom. So when NVIDIA reports their earnings, you want to go down and drill down to that networking revenue line. And if it's light, then that means it's probably heavy over at Broadcom. They asked Hock Tan about M&A going forward, as this company has basically built the entire business on the back of mergers and acquisition, obviously in the Trump area, although no company has really tested this yet, but the belief is that more M&A will happen. Again, nobody's really tested yet, so we'll see what happens. But they say, look, we're too busy with AI and VMware, and they're not really thinking about it at this point. And shares at that current time were up 15%. I'm seeing them drift a little bit lower. We'll talk about this technically here in a moment. But you've got strong revenues across the board. One thing that I do want to point out is your selling general administrative costs. Those went from $1.5 billion last year, right when the VMware acquisition was bolted onto this company. And I've said time and time again that they were going to whittle this down and continue to whittle this down. And here it is, $1 billion the previous quarter, under $1 billion on selling general administrative. They run things incredibly lean over at this company. And look at your R&D. Even year over year, it's basically flat. And so you had your total operating expenses last year at $5.3 billion on just $12 billion in revenue. Last quarter, your operating expenses were $4.4 billion on $14 billion of revenue. Now you had $15 billion in revenue, and your operating expenses went down again to $3.9 billion. Hock Tan is one of the best operators in the business, particularly about combining companies. And that is an underrated skill in the stock market. We've seen time and time again in the stock market across many, many different companies, AT&T being a great example, IBM probably being another example, where these companies try to acquire somebody and they can't integrate it. It just doesn't work. This company's made it work, and it's unbelievable as it starts to scale. And that's what we're seeing over at this company. So higher revenues, lower expenses. You can see what happened to operating income. It ballooned to $6.3 billion last year. You were just at $2 billion. It's just absolutely unbelievable. So it's bolstering up the balance sheet. Balance sheet looks particularly good. They still have a hefty amount of debt, which they talked about on the conference call is basically, not to just be super general about this, but these were interest rates in the 4 to 5% range. Some of them are even south of 4%. So it's not really super expensive debt, and they continue to work that down. When you get down to cash flows, you can imagine as you dropped your operating expenses and you increased your revenue, look what happened to your cash flow from operations. Boom, up to $6 billion. That's what has people so excited about this company. If the AI trend can remain on track and this company can deliver a lot of this, quote, serviceable addressable market between 60 and $90 billion. And then you've got another 4 customers potentially coming online to make this maybe 100, 150, $200 billion serviceable addressable market. Well, this company is run like an efficient operating machine. And so that would generate massive amounts of cash flow. On top of that, we haven't spent a ton of time about it. This company has a software business running at 90% gross margins. And again, they were able to whittle down the sales and general administrative of that business unit really across the board. But wow, that is going to be absolutely spectacular. Last year, $4.8 billion of operating cash flow, all the way up to $6 billion now. You're not spending a lot, okay? Property, plant, and equipment. You drive by the office buildings of many of these Silicon Valleys. I mean, Google's headquarters is spectacular. So is Apple's. You drove by Broadcom and you almost miss it. It's a very modest compared to most near $1 trillion companies in Silicon Valley. They don't spend a lot there. There's not a lot of wasteful spending here. In fact, they try to do their best to cut costs rather than increase them. So that's great for you, the shareholder. They continue to pay dividends. They did pause back the common stock repurchase, but they did repurchase some shares from employees, paid down some debt and those types of things. Just financially, things are in a very, very good place now. With Broadcom, the key is they have to hit the AI trend, and the AI train has to keep going. The more the AI trend keeps going, the more this company is going to benefit. In the after hours, you have ticked off the highs. You were consolidating in these shares right here in the about $200 mark in the after hours. And look, if you're buying Broadcom today, I would buy it and then just forget about it. I get asked questions all the time about stocks. This is a stock that you just buy and you forget about, and you just expect that, hey, look, in 2027, this serviceable addressable market, because there's a good percentage of investors that, first of all, don't understand this market. Number two, don't think it's going to materialize. And so if you believe that this is going to materialize, if you believe the AI trend is going to just continue and the trend to develop your own custom XPUs is going to continue, well, then this is the stock that you just buy and hold. Could it continue to move lower? Could you buy shares at $180 and these things trade down to $140? Yeah, that's possible. But in 2027, 2028, 2029, 2030, are you really going to care if you bought these shares at 200 or 150 and the stock's worth $3 trillion, which would be 3 times more than today? Probably not. And so I continue to load up on this one as we see volatility in the market. This is literally the top AI play. This is the top semiconductor company because you not only have the growth of their semiconductor business, probably not priced into shares, you have this gigantic software business that is also at this company, growing at a very healthy clip. This provides not only some protection to the valuation, but also upside as well. Broadcom, an absolute premier stock. If you buy individual stocks and you don't own Broadcom, I would probably call Fidelity, call Schwab, get a financial advisor. The game of individual stocks is probably not for you. Hopefully you enjoyed today's video. Back again tomorrow for the FANG Stock Recap Show. Good luck with your investments.